question to all of you is, with GST 2.0, what lies ahead, for the India's indirect tax landscape? Because GST is the biggest reform after completing 8 years, has gone through revolutionary changes. So what these changes means for all of you, and what lies ahead, for India Inc. and the whole indirect tax landscape? I will start with you, boss.
I think
Yes.
I think one of the things that happens is because we had so many different rates and that led to a lot of tax arbitrage. The one of the basic principles, they say that tax should be a neutral thing in business decisions. Tax should not drive business decisions. Commercial factors should drive business decisions. So I think with this massive set of rate changes, a lot of tax arbitrage is gone, which will probably help decisions to be rooted purely in business reasons. Also, I think some of the changes like removal of intermediary category. Intermediary as a category, for those who may not be aware, was leading to massive amounts of litigation for all exporters of services. I personally am handling at least 12 of them across multiple high courts. So I think doing away with that will reduce a lot of litigation. GCC is a massive sector, sunrise sector for us. GCCs were also under the cloud of intermediary litigation. So I think with that gone, a lot of risk perception around GCC's export of service position, that will be mitigated. So yeah, I think a fairly positive outlook for me.
Yeah, sure. Sir, आपसे बात करते हैं. What's your view?
All right. So from my perspective, I would like to first congratulate the Indian government and the GSTN authorities for setting up the tone for GST and establishing it successfully for the last 8 years. It has been a very incredible journey, I would say, because there has been a lot of ups and downs, and we saw a lot of digital compliance measures which have been introduced, like e-way bill and our IRN-based invoices. So the thing is, the government has made it easy to a large extent, the compliances. A lot of effort has gone into it. The most successful thing so far has been that the GST councils were taking unanimous decisions, and it never happens. 56 GST council meetings have happened so far, and the results were almost agreed by everyone. There is no such politics happened around it, so which is a great thing. And the latest rate rationalization measures, what we see in the newspapers every day, it's also known as GST 2.0. Here we see that, as Sudipta mentioned, the classification was the biggest dispute, and now by reducing the tax rates, the classification risk is gone. Now there are very, very clear identification of the tax rates. So now my sense is that classification risk will go down. The customers, as Amol started the discussion, that now the GST is gone on the tea and coffee. So the GST also gone from lot many commodities, or it is reduced drastically. So it will surely give the bandwidth to the customers to spend that money either by consuming the same product more, or using that savings to some other commodities. So overall, it is expected that it is going to enhance the consumption. The domestic consumption is going to grow up. Therefore, what my sense is that it is really a very good measure. Going forward, I think the expectation of the industry is that at least the transitional provisions should have been made more clearer and stronger, which we see that they certainly require a little more attention towards it. But all in all, going forward, if we can have more measures focused towards MSMEs, that would be great, because MSMEs play a lot of big role in the economy. Large taxpayers still have the capacities to manage the compliance obligations, but we need to focus ourselves on the MSMEs also.
Thank you, Sanjeev ji. I think notable points, and I will come to you specifically on the manufacturing side and transitionary, projects MSME that you mentioned. But Prabin ji, I would like you also to share your opening remarks. प्रवीण जी का एक प्रॉब्लम ये है कि मोस्ट ऑफ द पीपल अंडरस्टैंड इट इज पार्ट ऑफ द जीएसटी काउंसिल इटसेल्फ बिकॉज कंपनी का नाम ही जीएसटीएन है. सो मेनी पीपल कंप्लेन कि बहुत जीएसटी ज्यादा है.
It's a GSTN, the technology arm of GST ecosystem. We are the people who implement the total GST reform. We are the people who are behind your e-way bill, e-invoicing and everything. So this is the company, like any other corporate, we manage the total source. So we also file the GST return. We also get the notice of GST. So we are a normal company, though managing the total GST ecosystem. So just coming back to Amol on your point, I will give a different perspective from the economy standpoint of view. How Indian economy will grow post that GST reform 2.0. I think like my co-panelist has already, Sanjeev ji said, and other people have said, it will be more cash rich economy, like people will have more cash in their hand. It will be more consumption driven economy will going to happen. When you will have a more consumption driven economy, the economy growth is likely to be happen in a more faster way. And further, it is going to increase the lifestyle of the general public. Because you see that insurance is getting now, it's a nil, 0%. So more people will want to take the health insurance, life insurance and other kind of a thing. They will secure their future. There will be more this kind of a thing. And it will, in fact, get the more insurance premium and the money will go into the stock market and the other investment cycle, those kind of a thing. So the circular economy will increase in manifold or in a greater way, and which will ultimately fuel the economy and the growth perspective. People will be more growth oriented things will be there.
Sure, Prabin ji. I think, Mandeep, I will slightly tweak the question rather than what lies ahead, because I think insurance is in the headlines. And I'm still trying to decode, because till now the insurance companies were asking for a rebate, 18% GST हटा दो. अब जब हटा दिया है, they are cribbing for IC input tax credit. So we really don't know what was wrong and what is right. So could you just explain that in terms of how the whole insurance industry is trying to embrace the new changes of GST?
Okay, this is what we call putting on spot, right? Okay, yeah, I mean this is right that for 20, 22 years, 23 years, we have been asking for lower rate of tax or exempt or rather nil rate of tax kind of status for insurance, because this is social security, right? Financial security brings social security and it create a very different kind of a impact in the organization. I think what we have been asking is nil rate or a lower rate rather than exemption. Exemption basically is a problem is that the ITC cannot be availed. In nil or lower rate you can, right? When the ITC or input tax credit cannot be obtained, it has to be absorbed in cost. And that's where the problem is. It's not only a matter of profit. Insurance companies are governed by a solvency regime, which means that they have to keep a minimum amount of capital based on the kind of business they are writing. So even if they are ready to take a hit on profit, the capacity to write business may get impacted. So you will not be able to write more business. So in a way, I would say that most of the discussion is happening saying that there is a profit impact, which everybody says कि अच्छा क्या हो गया कम profit बना लो, right? ठीक है. But the capital itself is a counterproductive, because now you cannot write more business even if customer wants to come and buy. So this need to be tackled, and right now insurance councils, life and general insurance council, IDA, I mean they have been meeting. The industry has met finance ministry as well to figure out what could be the way forward. We have not figured out. I mean this is in works. At least for customer, it has started happening that the customer are not being charged with GST. Now, how do we handle it from a capital and profit perspective is something that is being in works.
Right. Okay. Looking forward to it, sir.
See, the other point is that if the capital problem is solved, which can be through a different regulation,
Yes.
then the scale increase should be good enough to compensate the absolute rupee profit drop.
Right.
The core philosophy is if this is good for customer, this is good for industry.
Great. Certainly, we'll try to learn more from you on that point. But Ajay ji, let me come to you. I think industry, obviously there is a lot of positivity in the market because the high frequency indicators of the economy are showing the great recovery, positive signs. But on the other side, geopolitical tensions are high, trade deficit is very high, and Trump tariff is also making challenges. So with GST now, how are exporters still impacted by refund delays and compliance bottlenecks under GST? And what can CFOs do to mitigate such, working capital pressures and something like that, sir?
In fact, from export perspective, we feel that GST 2.0 has been released at a very right time when Indian exporters are looking towards the domestic market as well. And for that, it's very important that domestic market itself expands so that additional goods can be absorbed in the domestic market. Though, of course, the two are not just related one. GST has been a game changer for exports because it provided the complete zero rating of exports. In the past, we have the central sales tax which was not being absorbed for the exports. Now we are having complete rebating. The cascading effect of taxes has been taken away, which has made the inputs cheaper and the end product competitive. The warehousing has been a revolution because now we are having the warehousing at the most strategic location, which has the volume, which has brought down the cost also. Logistics has been revolutionized. I personally feel that this is the segment which has benefited the most, and logistics cost in India, coupled with the infrastructure improvement, has come down from 13 to 14% to 9 to 10%. I think if I'm looking into the issue of a tax refund, most of the tax refunds are not happening particularly on the GST front because of the mismatch of data. You have to file GSTR1, GSTR3B and the shipping bill. If the HSN code is different, invoice number is not there, or the amount is different, it gets stuck. And secondly, I think the tax authorities are still not in that frame to expedite the refund. They are looking for ways and means to deny the refund. And that's why they rely most of the time on the physical document. So as a CFO, I think I have to use the automation tool to file correct return. I should have some kind of due diligence for cross verification. Look into the possibility that we are using the best technology and the best brain for that. And probably we have to look into, even if the GST is delayed, I should have my cash flow happening, and therefore simultaneously we have to look into the alternative mode of financing, maybe pre-shipment financing, maybe the factoring also. In the GST 2.0, I think the biggest gain has been it has lowered down the road that we are moving towards two-tier GST. I don't expect in India with so much variation in the income to have a single tier GST. Probably we have made a jump into that. Very soon the demerit goods may move and we will have 5 and 18% tax into the country.
But Ajay ji, I want you to add more, on the specifically refund part, right? That's what the pain point that every CFO talks about, at least not on camera, off camera, which I have seen in my discussions. We have seen major changes in GST 2.0. Do you see any hope now that at least refunds will be processed seamlessly or maybe in a faster manner?
In fact, if you are looking into the rule, even earlier also there was a provision that provisional refund to the extent of 90% will flow to the export sector. It has not happened, but I personally feel that if they are looking into a complete technology-driven refund, this is possible. If you introduce any element of human intervention, probably it will not happen. So I'm expecting that they may be using some kind of risk-based management system, and any case which is cleared will be system-driven so that 90% of flow will happen. I think this has also addressed one of our demand for the low-value shipment, where e-commerce exporter were earlier not getting the GST refund because the value was less than 1,000 rupees. That has also been addressed. And on the services front, he has rightly said, for the intermediate services, since the place of location has been changed to the place of recipient, that will definitely flow the services exports also.
Sudipta, let me come back to you, and my question is specifically about anti-profiteering provisions. The question which I have prepared specifically for you is, in one of the interesting fact about GST 2.0 reforms is the conscious decision of not reviving anti-profiteering provisions under GST. So while it's still early days, right? How do you think that decision is working out on ground? And do you foresee anti-profiteering provisions being reintroduced in the future? What's your take there?
I think by all accounts, it seems unlikely that they will reintroduce. That's what we have been hearing repeatedly from whichever, formally or informally, whenever we are discussing. And if we look at the experience so far, I think it has been reasonably well. I mean, if you see the number of advertisements where people have said that we are passing it on, we have reduced prices, etc., I think that is happening. Also, there has been a lot of flexibility given. Under anti-profiteering, the rules were much stricter. They said you can't increase grammage, you can't increase quantity, you have to reduce prices, and you have to do it in this particular manner. I think there is a lot more unshackling that has happened this time around. The government has said that you just pass it on, method of your choosing, we are not going to prescribe. And the sense also we got in all the conversations is anti-profiteering was not something that worked very well or very efficiently for the government. It got mired in litigation and it went to court and it's still stuck in Supreme Court, to be honest. And the point is the outcome or the collection that happened from anti-profiteering was not probably commensurate. So I don't think it will come back. I think what would help is, if there is, like yesterday we had the legal metrology circular which said that re-stickering is not mandatory. You can do it, it's optional. You don't need to do 2 newspaper advertisements, etc. I think more such clarifications in a consolidated manner will go a long way to help.
Sure, that was meaningful, Sudipta. Sanjeev ji, I have a very important question, and great to have you from specifically the manufacturing, side, which is now what you can say the government's poster boy, but it still didn't manage to dance in last so many years. So, what will make the manufacturing poster boy dance? Will the GST 2.0 will make it dance? In a simple word, sir, ease of doing business has become a major challenge for every company operating in a manufacturing space, and that's what they talk about. Do you think GST 2.0 has given you some freedom of ease of doing business?
Yes, of course. I think it will bring in its own, relax to the industry. The classification thing, what we discussed earlier, it is going to give a lot of relief. The tax disputes which were hovering around this topic are going to get mitigated to a very, very large extent. I wish this same concept that government has brought in for GST can also be applied in the customs, because there we see a lot of challenges, because there are multiple number of classifications and multiple custom rates applied. So if that can also be considered, I'm sure, and at some point of time, government will do such a bold step that has been carried out in GST 2.0. So that is something, Anmol, the magic of enjoying the benefits of GST2 lies in how better prepared you are internally. So one has to develop their own in-house, I would say, powerhouse for taxation, powerhouse for compliance. I think there the CFOs needs to rather allocate little more bandwidth, and we need to create a setup which is highly, which is giving a compliance as a first culture in the company.
Sure. I mean, I will learn more from you on the manufacturing side, but you mentioned compliance, which is like a segue for me for the next question, which is actually I have crafted for Prabinji. So what recent GST initiatives are making compliance simpler, and how can CFOs leverage them for efficiency?
See, GSTN main forte is making it more easy task for the CFOs and the finance fraternity, for the chartered accountants and all. And throughout our journey, it's our endeavor to make it more easy, more people friendly, more user friendly kind of a thing, the UI UX and other thing. So we have a dedicated team who are working day in, day out towards it. And if you see that it's all governed by the regulation and law. If the regulation is making it simple, we implement in the same way. And likewise, if you see that the adoption of technology, there is two things. If you make the rules simple, but the adoption of the technology is not there, so that GSTN is making sure that the adoption of the technology at the user level is be very effective through training program, through various webinar and other things to make people understand. Here, the role of GSTN come. And then the second part is UI UX.
how the things are making more simpler, how the things can be more user friendly, how the tools that the auto tools can be prompted and given so that the user can use it automatically, how the auto populated various data can be fetched. So through these kind of a measure, we try, and our endeavors is to make this thing simpler. So it's only three, like our philosophy is work on 3T: tax, technology, and transform. Through this 3T, the total ecosystem will work. And like if you see that gradually that e-way bill, e-invoicing, and everything is getting auto-populated, and there is a synergy among all these things. The second aspect is that the ambition of government is that the return should be auto-populated. Those kind of things is on work in progress.
Okay, sure. Please be ready with your questions also. I will come to you, and it will be great if you have any specific questions very soon. So Mandeep ji, now again, we discussed that input tax credit and all, but what will actually make the insurers drive going ahead? With obviously these are the major tax changes that you have seen. What will actually scale up the industry if we look at the GST background?
सबसे पहले तो बोल दूं, ये कह के निकलेगा कि GSTN गवर्नमेंट की कंपनी नहीं है, इनको हल्के में मत लेना, जो वो ई-वे बिल चलता नहीं है ना, तो यू नो jokes. Okay, now I mean, rate is only a small part of insurance penetration, right? As you said कि आप सुबह उठ के 2 कॉफ़ी नहीं पीते, 2 चाय नहीं पीते, तो सुबह उठ के आप ये भी नहीं सोचते कि आज इंश्योरेंस खरीदेंगे, कितना अच्छा दिन है, राइट? एंड ये भी नहीं सोचते कि अब 500 रुपये सस्ती हो गई, 1000 रुपये सस्ती हो गई, तो आज लूँगा, राइट? बिकॉज दिस इज मोर स्ट्रेटेजिक काइंड ऑफ अ प्रोडक्ट, एंड इसके जैसा कोई प्रोडक्ट नहीं है. देयर इज नो प्रोडक्ट इन द वर्ल्ड विच सेज you give me 10,000 rupees and if something happens to you, I'll give you 1 lakh rupee, right? There are reason to it because there is no other product like this. So ये बहुत अलग है. So penetration के लिए there are many things that need to come together. For example, I would say the availability of data. So India stack has been created. Plenty of data is available which can be used very innovatively and can make life easier. But yet there are restrictions and they are not a level playing field to access that data, right? There would be reason. I mean, data privacy, etc., the controls in the system, all things are right. But if we need to go further, need to drive this business, then we need to leverage it. We need to build a trust infrastructure, which makes this possible.
Right. But quickly, you know, Mandeep, sometime back also you mentioned this about profitability and insurance companies' view. Will profitability be impacted now because of input tax credit is gone on the insurance companies? And importantly, how your dashboard is going to change with this major tax change as a CFO?
The second question first. As far as the dashboard is concerned, so there are ways you look at growth. The premium is accounted for growth reporting. So there could be some tweak in terms of whether this is inclusive GST, excluding GST, etc. So the growth numbers reading for a short period of time, let's say 1 year, till the time the comparable numbers come in, or you go back and change the previous number, there could be anomaly that people need to understand. Now, in terms of profitability, whether it will go down or not, please understand, to make a product viable, a kind of product which says that you pay me 100 and I'll pay you lakh, a lot of calculation goes into making that, or rather providing that confidence that I can actually pay that 1 lakh rupee when it is due. Those calculations are not only 1 year, these are multi-year kind of calculations, and based on various assumptions about your life, health, you know, longevity, mortality rate, etc., etc. So this impact, how much it will be, is slightly difficult to give a number just like that, right? There would be some impact, but at the same time, as I said, if the price is lower, there would be some increase in the scale. The changes like this don't impact you in a day one or a day or a year. These are changes which impact your life over a period of life, over a long term. For example, I'm not drinking the 2 cups of tea, but let's say I'm on a 1 lakh salary after paying 30% tax, 70,000, let's say I spend about 80% on my expenses. 56,000, let's say there's some saving, even if it is 5,000 rupees saving. But if you put that into annuity, then you will be astonished that what else you can do with that saving, right? And this is, I think this is where the bet is.
So, noted, Mandeep ji. Ajay ji, again, the question now specifically is about India's global trade competitiveness. A lot of companies and specifically the CFO says we need to adopt global practices. We need to be scalable and we need to achieve the new goals. So then we need those global practices, right? So with GST 2.0 and the changes that government is trying to make with 2.0 as a vision, what is it that you think that government should do specifically for CFOs to boost maybe more on GST side and specifically on the manufacturing side also, if you could add?
In fact, when I'm looking into what else needs to be done for the export sector, I think the need of the hour is sooner or later we have to bring petroleum and electricity duty also within the GST, though of course at this point of time they are getting a rebate under the ROTAP scheme, but due to the budget limitation at times it is slashed. Secondly, we are looking for a lot of procedural simplification, and our idea is that when we are looking into the GST refund, why it should be linked with the EGM filing. There are errors in EGM, there are delays in EGM. If drawback is given at the let export order stage, GST can also be given at that stage. Thirdly, if I'm looking into the capital goods on the IEST, I'm getting a refund of the capital goods. Under the input tax credit, I'm not getting a refund of the capital goods ITC. That needs to be looked into. On the services front, we have to be conscious of the fact that global liquidity is a challenge, and therefore linking GST refund with the remittance will involve a delay, because the payment which were earlier coming between 30 to 60 days now are coming after 120 to 150 days. And finally, I again expect that whatever the government has announced is implemented quickly, efficiently. In GST 2.0, I'm looking into ease, efficiency, and equity.
Noted your point, sir. Anybody has any specific question? I can take maybe one question since the time is slightly limited. Anybody has any question? Yes, can we have a question? Mic there.
Hi, Amol. So Gopal from NASCOM. So question is like the rates have changed. Some of item become cheaper and other are more expensive. We understand that luxury cars now attract higher GST, but at the same time, certain state level tax have been removed for consumers that I heard actually. So has the overall tax burden, including GST, increased or decreased? That is one. And second, at the same time, the government revenue, does this change balance out through offset, or has been some losses to total collection?
Okay. आपने जब BMW का नाम लिया मुझे लगा आप डिस्काउंट मांगने वाले हैं.
Correct.
संजीव जी.
So certainly the tax rate has gone down. The earlier there was a compensation cess on the sale of cars, on especially the high-end cars. There the compensation cess was ranging from 1% to 22%. Now that is gone now. So certainly the cars are going to be cheaper. As far as your question of whether what is the impact on the government revenue, so I am not able to comment upon that. Government has done its maths and they have already released a nationwide number that about 48,000 crores of hit they have taken. And the only idea is that it should boost the consumption in the long run. So and therefore with the higher amount of consumption, they are going to offset this loss of 48,000 crores in a year. So I think that's how we should take it.
For more details, गोपाल जी आज ETCFO के एक आर्टिकल पढ़ लीजिए GST काउंटडाउन पे, उसमें बहुत सारी डिटेल्स है. On one part the government will suffer the losses, but on the other part they are estimating that the consumptions will grow, demand will grow, yes. So perhaps the revenue will be more, so that will offset. Yeah. Anybody has any other question?
So this is my question is to Prabin ji from GSTN.
Sure.
So obviously government has done a recent GST 2.0 reforms, and I think that's a welcoming from a consumer as well as from industry perspective. I want to understand from a technology front, because IMS was being introduced last year to October 2024, and now auto population of returns has been done. So is there any workaround on that part just to make the compliance more streamlined in line with the whatever GST 2.0 is doing?
Yeah, our team is working day in, day out to implement that 22nd, the rate changes and other thing, and from 1st of October, the refund and other things. So everything will be very smooth, and we hope so.
Okay, thank you.
So the time is up, but let me just maybe you take each one of you can take just 10 seconds and quickly. A lot of things have been done with GST 2.0. There are high hopes and expectations that the growth will be back, demand will be generated. Anything apart from what we discussed that government should do specifically to boost the economy to a newer level as a CFO, as an expert, as a consultant that you think, starting with you?
I think one big ask has been, even in service tax regime today in customs also, we have the concept of AEO, or large taxpayer unit. That has been missing, and that has been a long-standing demand for, I think, compliant companies with a great track record, etc. A lot of compliances can be eased out if we bring back or introduce the concept of LTU or AEO in GST. On the dispute side, and I mean, I think all of us would appreciate that a quick dispute and certain dispute resolution adds a lot of points in the ease of doing business quotient. Currently, what happens is at a slightly lower levels of adjudication under GST, it's a given in 90% of the cases the decision will be against you. So I think a separation between adjudication and investigation wings will go a long way for independent adjudication, and I think that will enhance the ease of business quotient significantly.
Yes, certainly.
Just to update Sudipta that GST tribunal is.
No, I know, I'm aware. I was saying the 2 levels below that.
Sure. Sanjeev ji.
No, absolutely. I think I also echo this that the GST 2.0 should actually go into deepening rather than we only focus on widening. So apart from widening, we need to go deeper into it and see where at the grassroots level where the issues are. Things look good from a helicopter view, but we need to also somehow land on the land and see what is happening there. So that's one. The second important thing is actually the whatever changes we have seen from the 2017 till now, they are actually a result of collaboration between government and industry. So that collaboration has improved quite a lot, and I am sure in the future years, in the times to come, it should continue, and it is actually up to industry folks that how much they can give feedback to the government, and government has been very kind to actually accept that, and most of the times if our proposals are really good, they have been kind to implement as well. So I think that should continue.
Yeah, thank you. I think Sanjeev ji has already mentioned that it's a two-way coin. I mean, industry has to accept and adopt, and the government should listen to the industry's proposal and then evaluate that what are the things and how it is fueling the growth economy now. So it's a, I think, win-win situation for both the.
I think the direction, the rate reforms has been done, and you generally don't come back to it pretty frequently. So the next level of reforms could be on the process side, simplification, risk-based refund, etc. Now, there could be two more views to look at this particular situation, and with a caveat that probably I'm not even qualified enough to talk about it, because this government is very deep. Whatever they do is they do with extensive data and impact analysis. So one could be, collecting indirect tax is easier than collecting direct tax. And the base can be really broad, without much administration about how to take this tax to lower levels. So if there could be a direction of collecting more from the indirect taxes by widening the base and reducing the direct taxes, that could be one balance that can be fine-tuned. The alternative, the other way can also be is that rather than segregating or rather exempting a complete category, we can also say that is an income-based or let's say a value-based tax, where let's say up to 5,000 this is zero, and above that then the tax progresses, so that the people who really want this commodity get it cheaper, really cheaper.
Just add one thing here. So as you said, this is an indirect tax. and it must be treated like an indirect tax only. At no point of time, government should make an effort to make to convert it into a direct tax. So I think that is a very fair ask.
That's a headline for me.
Yeah,
Good.
yeah. Thank you.
I think, yeah, GST is stabilized. A lot of reforms have been done by the government. CFO needs to bring the best global practices into the country now. They have the global operation, and I expect them to find out what are the best global practices and try to bring it into India, though of course it needs to be adopted in the Indian conditions.
Fantastic. I think those were some remarkable insights. I generally don't share my opinion, but on this particular part, because I do speak to a lot of entrepreneurs and startups, I think that, like you said, deepening has been happening, expansion we should focus more on. I think a lot of startups we have, in fact, they have raised billions of dollars. If you look at 125 fintechs, those are unicorns. A couple of them have listed. But if somebody wants to get into the entrepreneurship, and if you start earning even 1,63,000 per month, you fall under the GST bracket. I think the 20 lakh limit is very, very limited. 20 lakh is like almost nothing if you start a business. 1,62,000 per month is anyway. So I think if that limit could have been expanded to maybe 25, 30 or maybe more than that, more entrepreneurs could have thought about it. Thank you so much for listening to me once again very patiently, and thank you for those remarkable insights. Thank you.